In the last 6 months, we saw a lot of confidence coming back to the global economy. This is largely due to a very strong and robust US economy. In fact, the United States market has returned some 13.5% since the beginning of this year. The Eurozone exited technical recession in the first quarter this year, allowing the ECB to cut rates in June last month. Similarly, we are also seeing some green shoots of recovery in the Chinese economy. The manufacturing sector is recovering well, particularly in the semiconductor space and electronics, which bodes well for Asian economies that are reliant on exports. On the other hand, we are cognizant of some of the market risks and the challenges that we face today. Inflation continues to stay sticky, making it very hard for central bankers around the world to start cutting rates. We're also paying attention to political risks that are starting to become very prominent on a global standpoint. While the market landscape continues to look challenging, there are opportunities that investors can consider, particularly through diversification and investing into good quality companies that has a consistent cash flow, strong revenue, and low debt ratios. With business activities coming back and exports starting to grow, we think Asia companies will continue to benefit from this cycle. We like the dividend equity space, in particular, Asian ex-Japan dividend equities. Dividend equities not only forms a good buffer in times of market volatility, it also gives you the necessary income that complements a fixed income portfolio. We think that ASEAN equities will also benefit from this, particularly as the tourism boom from China and around the world starts to pick up. We like healthcare, not only on a demographic and on a structural standpoint. We also think that technological advances and innovation will also propel this sector to greater heights. Last but not least, we also like fixed income investments, particularly in the financial securities front. Post-financial crisis, many banks and financial institutions has already recapitalized themselves, deleveraged, and also de-risked a lot of their assets. Going forward, as asset quality continues to improve, we think that banks and financial institutions will do well.